Hi, I'm Ali Zendrian, editor-in-chief of Brand News, and this is the Financial Services News You Might Have Missed podcast. This is where I uncover news gems that haven't gotten their full chance to sparkle, and I dust them off a little bit. Here with me today is my trusted co-host, and more importantly, my personal financial advisor, Brandon Galisi of Galisi Financial. Brandon, how you doing?
I am doing well. It's a beautiful, sunny and 70-degree day out here in Southern California, so can't really complain. It does get dark way sooner now, but that's pretty much everywhere across the country now that we've shifted our time back an hour. But yeah, we're still rocking and rolling out here.
Very nice. Well, our first piece of news this week is from Apiture, which is now part of CSI. They have a new AI-powered user interface through its Apiture digital banking platform that adds more AI to its digital banking solutions. Its Ask AI in particular allows account holders to get real-time guidance and transaction-level insights. The press release was using the example of how much have I spent on subscriptions this year being one of the questions that it could answer. The new AI enhancements also support AI-driven marketing based on account holder data. So I thought that this was interesting. First of all, in terms of things like being able to query my own transactional data and say, how many times did I go out to eat this month? And then be able to calculate and say that number should be like half of what it is. I don't understand why we're not already at that kind of a place, but I'm glad to see that this is moving in that direction.
I think this is a really cool use case for AI here, and it's just having to sift through data that's already really well structured inside of your bank. So I agree. I'm surprised it hasn't maybe come out a little bit sooner, but I could for sure see this being adapted more because it's not really even doing predictive type of modeling, which that's where it gets a little bit more complex. You're starting to make more assumptions like how much should I be spending versus that's a bit more of a complex or nuanced question. But just to say how much have I spent on subscriptions, how many times did I go out to eat, which again, it's likely the questions that most people are asking themselves anyways, even whenever you're going through on a tracking perspective. And then, yeah, like you said, Ali, you can then determine, okay, do I feel like, is that too much that I'm going out to eat? Or actually based on, what we were doing, you went to some kids' birthday parties or family was in town, so you went out to a few extra meals, but then you just have the data to gain that, what I like to call the awareness, which is the whole point of tracking spending. So I think this could really streamline someone's process of tracking their spending with these really cool queries with AI.
Yeah. It does make me wonder, though. So we were talking a few weeks ago about how the traditional banks are trying to get more into fintech and be more innovative and whatnot. I would hope that something like this is coming to the major bank accounts because, as we're mentioning, this would be so much more helpful than me having to scroll through and, oh yeah, look, that was one. I don't know. What is this transaction? I don't even remember. I don't know why we're not here yet.
Yeah, it would be interesting. I mean, I think at this point, I don't really use any of the big banks. Probably the biggest will be a credit union that Amanda and I use is Navy Federal. So they're nearly like a big bank, except for it's like you get all the benefits of the big bank, but then you also get the benefits of it being a credit union and lower to non-existent fees and stuff like that, which is pretty cool. But as of right now, at least since I've logged in, they don't have anything like that yet. But I couldn't imagine we're that far away. Again, with all the models that are already out there, data security is going to be likely one that they're probably the most concerned about because the tech is there. They maybe just have to figure out the compliance side of things. But again, it seems like really low-hanging fruit from a value add perspective to a lot of banking clients.
Yeah, very good point. Well, we will see. Our second piece of news is from Safanad. I'm going to hope that I said that correctly. It's an investment company which launched a series of videos by Dr. John Rutledge. They're called Asset First Economics, Two Economies, Not One, and Asset First Economics, Why Inflation and Interest Rates Move Together. The press release noted that we should be focusing on the United States' $566 trillion balance sheet versus its $30 trillion GDP, because that's really where all the big economic stories are originating from. So what struck me about this, not that I think that he remembers me at all, but back in my Forbes reporting days, Dr. John Rutledge was on the Forbes Intelligent Investing panel, and among the people that I had to query for different articles. So hi, hope you're doing well. Additionally, though, I liked this thinking about assets in a different way because I think that that's particularly helpful. And I think that we have to change some of the ways that we frame our thinking, but would love to get your thoughts on that.
That was my biggest takeaway as well, Allie, where, so I'm not an expert economist. I mean, I'm of course, certified financial planner and have a pretty good handle on the economy, but even reading through this, I'm like, okay, this is some deeper next level type of things that would require jumping on this video series to learn a little bit more. So I don't have as many comments on specifically the asset first economic analysis that he was doing. But again, to echo what you were saying, I really do appreciate people that are being innovative and wanting to shift things and not just accepting the status quo. And well, that's always the way that we've done things, so therefore we will continue. It's like, no, if there's a better way, let's go the better way. If there's not a better way, okay, fine. But at least we have somewhat explored other options to confirm that there's, what we have done is still the best way forward. Again, appreciate the innovative side and just being able to think about things, not just through maybe the GDP lens, but also bring the balance sheet into play as well, I think is really cool.
Yeah. To that end, actually, so this different way of thinking reminded me of Kaya, the alternative investing groups. They've launched a total portfolio approach. So basically, instead of having a portfolio that says we need to have 60% in equities, 40% in bonds, it's really just looking at each investment's goal and returns and whatnot, and evaluating the end goal that the client is trying to achieve to make sure that everything's really working toward that, versus saying we have to look in this box and we can only do that much. So I think that that's another interesting lens to look at things.
Yeah, I really do. And I've talked to some other advisors about this. I feel like the next gen advisors, if that's what you want to call, folks like me and other younger advisors, but aren't just going to be okay with, let's just do the classic buy and hold 60-40 portfolio. I'm not saying for sure that's wrong, but I mean, even we saw in 2022, relatively conservative portfolio of 60-40 was still down a pretty substantial amount, almost down as much as the S&P 500. I mean, again, everyone can go look at specifically what the data was for a 60-40 portfolio. I'm not quoting any type of performance here, but we saw people thought that it was going to be a relatively conservative portfolio, and then we didn't see that in 2022. I mean, there was specific reasons for that. So I really do think that the next gen advisor isn't going to settle for just, let's just buy 60-40 and hold it. And then in 30, 40 years when you retire, then we'll start figuring out the income side. I think more advisors are looking into, and we've talked about this a ton on the podcast, alternatives, whether that's private credit. We've talked about that a decent amount. We've even talked about some, it's not venture backed, but some PE, some private equity type investments as well that more people are getting into. So I'm not surprised that if more advisors don't start looking in outside kind of the way we've always done it, if you will, from an investing perspective.
Yeah. Well, it does, trying to read their paper, and obviously I am not an investment professional by any stretch of the imagination. It does really take a mental shift to try to adjust these. So whether it's this view of economics or whether it's that view on portfolios, it really takes your brain and says, I know that you think that this is correct, but actually maybe it's not, and you should think this whole other way. So it does take a while, but it does seem as if it's putting us more in the right direction than it is just, like you said, staying the course because that's what we do.
Yeah. And I mean, I think even looking at what I do, I'm an investment advisor rep at Portfolio Medics, who they're the ones that I use for my investment management. And the majority of my clients are invested in more of an absolute return style. You could likely ask a bunch of advisors. They might not even know necessarily what that term is. Whenever I was at a large hybrid broker dealer, I had never heard of this type of proactive investment strategy that really is trying to minimize the downside so that when the upside does come, you can get some potential outperformance, or at least potential outperformance when it comes to a risk-adjusted type of return. Sorry, that was a lot of jargon right there. But even that, I'll share this strategy with different advisors, and typically the ones that aren't as innovative, they're not as open-minded, not as forward-thinking, just shut it down. Like, we just want to throw out all the negatives. Why would you invest like that? This is the way that people have always done it. And I'm like, okay, interesting. But then I'll share it with other advisors who, again, I would for sure classify as more innovative. I'm like, oh, tell me a bit more. I mean, they might have some questions, might not be fully bought in, so to speak, but they're not just going to shut it down. They're like, well, tell me more about that. That's pretty interesting. What has the performance been like historically? Oh, why do you think that is? How exactly is this working? So again, I really do think that advisors who are even just a little bit innovative are going to really have a leg up from a differentiation perspective in the next 3 to 5 plus years.
Absolutely agreed. What better way is there to stand out than to truly be bucking the trend? So love it.
Yeah, absolutely.
As far as our third piece of news, this is from AtoZ Communications Client Asset Map, which just integrated with eMoney Advisor. So this powerful combination brings together complex financial planning and a method to simplify client conversations and present household recommendations with clarity. What I thought was particularly interesting is that Nitrogen's 2025 firm growth study showed that the vast majority of investors, 90% of them, want to understand an advisor's thinking behind their recommendations so that they can understand what it is that they're doing and why. And so I feel like this really speaks to that. You're getting both the financial planning in there and then the explanation and the thinking behind it. So to me, this sounds like a win, but would love to get your thoughts.
I think it's a win across the board. I think advisors that are using both of these platforms are going to win because data entry can really take a decent amount of time. And even if someone is paying a paraplanner or an admin to enter data and then trying to update it constantly, that's a lot. And especially if you've got multiple different financial planning tools, which a lot of advisors do, now you're having to manually input data across, at least one, if not two, maybe three or even more platforms. And that's a lot of additional work for whoever is going to be doing that. Again, I'm a huge fan of having one single source of truth for, say, a client's balance sheet, for example, and then figuring out ways, how do I get data over? And sometimes it could be a manual process, but in this case, obviously, it's not going to be a manual process. You get it in one source of truth, and then whether that's eMoney or Asset Map in this case, and then can get sent over to the other. Again, I think that's going to be great.
Yeah. So I know that you personally do this, obviously being my personal financial advisor, but you've been great at explaining this is why we ought to be doing this. And even if then I have questions, there's the banter back and forth and we discuss. But for advisors who aren't really giving that thought process behind and aren't used to that, what would you say as like a good first step to start giving the thinking behind?
I would just say start doing it. I honestly, I don't know how anyone does it differently. I feel like I spend so much time in the behavioral and the psychology aspect of finance, where I argue all the time, you could come up with a perfect, however you want to define that, say it's mathematically optimized, but if it doesn't fit the client's goals, values, they're probably not going to take action. So again, what my goal is to understand the client to the best of my ability, but you're still going to, no matter how many good questions I ask, Allie, you're still going to know more about your finances than I do, but I can do my best to understand you, your goals, what you're looking to accomplish, understand what truly is important to you, and then kick off explanations or recommendations and say, hey, Allie, I recommend XYZ because you said this was important to you, but now let's have a collaborative discussion. And then by the time we'll say decide on an answer, and which again could be slightly different than my initial recommendation because it's that collaborative discussion, you're much more likely because it was either you shifted the idea to fit you even better, or I hopefully get it right on the first try. And it's like, oh yeah, that makes total sense why I'd want to do X. And now you're much more likely to do X because it's either your idea or an idea that you fully bought into, versus if I just said, hey, here's 7 things, go do them. You're like, well, why? How is it helping me? What am I accomplishing? So again, I think when advisors are like, my clients aren't taking action, I think likely you need to look at, are you sharing the appropriate context and having a discussion? Because I feel like a lot of my clients, they will take action because again, they're bought in. Yeah. I don't think it's anything I'm doing special other than maybe taking a little bit of extra time to have the conversation and ask the questions.
I think you're not giving yourself enough credit, but understood. So you brought up the phrase, like, they're not understanding the why behind it. And it made me think, so even my 6-year-old daughter right now is in the why phase. Everything is like, why should I go get my shoes? You told me to, bring this to school. Why? And, granted, like it's slightly obnoxious and in the best way because she's an amazing little kid. But even that shows you the human element of, you can tell me to do whatever it is that you want me to do. I might even know that it's the right answer. But if you don't give me the why, my butt's not like going to go get my shoes.
Right. Again, yeah. So that's an amazing example. I think it's core to being a human being. We don't just want to follow orders and follow instructions, especially when it comes to our finances, which are incredibly personal. Like I said, I've absolutely come up with an idea before, and when a client's like, I don't feel as comfortable with that, or actually, what if we adjust it? And again, assuming they're not going to blow up their financial life, if they're like, well, I want to put 100% of my money in one single stock. Okay, well, I'm not going to sign off on that. We're still using judgment. But if it's, say, you should have 20,000 in your emergency fund, Brendan, I'd feel a little bit better with 25 or 30. I'm not going to quabble over that because they're going to feel so much better having the 25 or 30, and it's their idea. So I'm fine with those types of things. But again, I will say I do think that's a little bit more of a challenge because it's way easier to just say, hey, here's your monthly expenses, multiply that by this number. Here's what your emergency fund is, right, and then have no discussion. So you have to do that. And people don't want to just be told what's the why behind it. How does it fit their situation? And especially as advisors, oftentimes we're selling personalized, tailored, comprehensive financial planning or whatever other jargon that we want to use out there. And then we have to be personalized then. Just saying someone, oh, I'll put 3 to 6 months of expense in an emergency fund and leaving it at that, could have got that for free on the internet or ChatGPT. We got to do better.
You are doing better, so thank you.
Appreciate it.
Of course. So our final piece of news this week is actually kind of a clump of a lot of news. It's from the Financial Planning Association. They had a few things going on with them last week. They elected a new board. Their annual conference was this week in Denver, so shout out to them. And now they're announcing how they're going to reimagine their conferences in 2026 and onward. So given that the financial advisor conference space is crowded to say the least, these events will be aligned with advisors' career paths from their very early beginnings through growth and transformation and then leadership. So I have feelings about this because Financial Planning Association is one of my clients and they are fabulous. But I would love to get your thoughts on what you think a worthwhile conference would be and how this is working in the marketplace.
I've been talking a lot so far, so I will answer that question, but I'm going to throw it back to you first because you specifically said you got some thoughts. So I'm going to toss it back to you first.
I do have some thoughts. Well, first of all, so the financial advisor conference space is incredibly crowded, even just this week. So Schwab, in fact, was going on the same literal time as the FPA. Both big conferences. The fact that you have to pick between the two of them is crazy, but that's often what the case is, that there are these just competing, they're happening all the time. But just overall in their redefining these events, I think that it's important. So hearing the way that they want to go, it's going from, so granted this year they are not in this specific order, but they can potentially be in the future, which I think would be interesting and helpful. But the events are, so FPA Gather is the first one. So that's rebranded their Next Gen conference, which has been wildly successful and everybody really appreciates. But looking forward to seeing there how between students and up and coming financial planners, how they're learning things. FPA Summit is going to be next. That's, you're growing there. And so really you're acquiring more knowledge and skills. You're also networking very well. FPA Shift is going to be the next one. So this, I think I'm probably most excited about. Transform here is the energy behind it, and it being, like we were saying before, with these not necessarily contrarian, but contrary to popular belief ideas. I think it's having those and then being able to decide for yourself, does total portfolio approach make sense? Is that total crap? At least I've seen and explored all the different thoughts that I have around me as to how I should be serving clients, how should I be building my business, and then I can determine for myself what makes the most sense, because what works for you is not going to work for me, and vice versa. And then the last one that they have, FPA Lead. So Elevate here is the thought process there. And this is really for when you're either newly in a leadership position or trying to get yourself into that leadership level. So I think also having experienced in a past life, wanting to get into that leadership level and then taking classes within the company to get there and learn management skills and things like that. I think that that's super helpful. And I wish that more groups were offering that, because it seems like so many people just get promoted into a leadership position and don't necessarily have the skill set behind them. So those are I don't know if they're fancy feelings, but there are a lot of feelings. What are your thoughts?
I mean, I can just tell they're being intentional with their planning process for the different conferences and trying to connect with the advisors in the various stages, because there's always going to be challenges in any career, any industry at all times. It's just can look a little bit different. Obviously, whenever you're first starting out, that's an entirely different set of challenges than someone who's 15, 20 years into their career and just at a different spot of life in general, likely the business cycle too. And I think you touched on something incredibly important, where it's not even sometimes the word contrarian. Again, I don't think that's the right word, but just different ways of doing things. Because again, we know that personal finance is personal, and there's a reason that even different types of products have been invented. Now, sometimes those products are, you can almost argue they were invented because the commission might be so high for the particular salesperson, but high level product category wise, there's a time and a place for a lot of different things. And I think being able to see how other advisors are potentially implementing things. And even you said this too, Ali, even if that's you know what, I've looked into product XYZ or this process, and I don't think it's for me. And here's why. Now that's only going to give advisors more conviction as to why they maybe don't do that. So if you ever have a client that asks about that thing, but you're going to have the knowledge and the wisdom to be able to then share, instead of just, well, I don't like that, or, oh, it doesn't work, have a much more intelligent reason. Oh, here's why I don't believe it's right for your situation. And back to that why again, explaining why to the client from their situation this thing does or does not make sense, I think is incredibly valuable too. But again, if we're only talking to folks in our own echo chamber, we might not get that same level of experience.
Is it sad that as you were talking, I was also thinking of my 6-year-old daughter and the fact that her food likes are very limited? So why do you not like this? I don't know, but I don't like it. Never tried it before, but I don't like it.
Just don't like it, yeah.
Yeah, that's not really the right answer in life. I don't know if she's listening, but hopefully she is. I exactly agreed with you. But I would also be curious. So some of these events have really like up their game in terms of whether it's experiences or the different classes that they're offering or things like that. From a financial advisor perspective, what do you feel like would move you off the couch and say, you know what, I got to travel to XYZ because this event has this?
I mean, truthfully, the super short answer is going to be my friends are going. Honestly, like it would be to see specific people, and likely community is probably one of the larger reasons that I would go to a particular conference. Truthfully, I really haven't been to very many. I just really haven't, I guess, got off the couch. I've been head down working is what I'll say there. But I just want to make sure I'm going for the right reason. So I'd want to see people that maybe I've got an online connection with, but I've never met in person. So that would be one reason. But then I'd say the content itself, hopefully it's good quality content, maybe some ideas on how other advisors are doing things, or just learning a bit more about the industry. But I really do think so much of the value at almost any of these conferences, even when they've got, we'll just say, incredible speakers, incredible topics, really the in-between sessions so often is where a lot of the value comes from, where maybe you take something from that session and then you're workshopping that with another advisor kind of in real time and building those connections, I think is incredibly valuable. So I think if I were to say high level, what I'd be looking for, just solid content from a speaking stage perspective, but then good amount of time to then connect, meet other advisors, talk to them about the different ideas. So that'd be really what I'm looking for. But even for you, when you're going to a conference, what are you hoping to get out of it typically?
To be fair, when you said friends, I'll be honest, there are times that if I know that my friend Diana Britton from Wealth Management is going, I will try to sway finances and whatnot to allow myself to go because I would like to see her. It's interesting. And I apologize for calling like get off the couch as in like, oh, I'm just sitting on my couch doing personal finance. I know that there's a couch.
Oh, no. I was totally kidding.
Okay. Yeah. So, I mean, I am in my office, it feels like all the time, basically. So, yeah, if I'm going to make the travel and, leave the kids behind, have to organize all that, it's going to be for a good reason. It would be to, see a good friend. I feel like it's also now it's making those connections with people. So if I saw people that I knew were speaking or were going and I was like, well, I want to meet so-and-so, I would probably go out of my way to try to meet them.
I feel like you're especially a good connector. I feel like that's one of your superhero skills, if you will, whether that's on LinkedIn. Obviously you have not just the connection number, but actual people that you're talking to versus just vanity metrics that you're focused on, and just how many people inside the industry, outside the industry. So not surprised that you would be going on, checking out ahead of time and making, we'll call it pre-connections, if you will, before you even get to the event. So, but that makes a lot of sense, and totally fair reasons also that you're trying to get out of the conference.
Well, thank you. I appreciate that. Well, speaking of what the FPA has done this week, congratulations to D. Crystal Alford Cooper. She became the president-elect for 2026, which means that she's going to be the president of the FPA in 2027. As a woman, I appreciate seeing female leaders, so super excited about that. Although I'm also excited about the FPA's new CEO, Dennis Moore. He rose up through the ranks of the FPA, including 2 chapters in Texas, and is now the CEO. So I think, to sort of wrap up our conversation with a bow, I think having those kind of diverse experiences, whether they be from like different parts of life or different backgrounds and things like that, having that all come together and then you being able to judge for yourself what makes the most sense, I think is really going to help the industry move forward. Yay!
Love it.
Yeah, thank you. And Brandon, thank you. As always, I appreciate the fact that we delve into these. We have to figure out a word for contrarian that doesn't mean something negative.
Like contrarian means like almost you might be crazy, or like a
Right.
contrarian, like the Big Short guy, and he did look crazy until he was right, 18
Right.
months, however long later. But it's just differing or unique, and maybe even
Yes.
just innovative is good
Innovative.
enough. And innovative ideas. Not every
Yep.
innovative idea needs to be implemented, but can appreciate innovative ideas. Yeah, maybe that's it.
Exactly. I know. I mean, better that we have them than that we don't.
Agreed, for sure.
Thank you.
Yep. Thanks, Allie.
Nice.